Okay, so what we're going to do is that if you could look at the actual table you have to fill, um, we'll go back to that. But what I'm going to do is I'm just going to do this like a teaching question, right? And just do it all. And I think that's how you should treat it, because I think if you start trying to just figure out what's going on individually, I think that might take you more time. I think you should just go ahead and just calculate all the variances and then just pick them up and just put them in, right? So let's just start off with materials and just park your answers once you've found them. Right. So this, as usual, I think almost a bit of a fair question in that it feels a little bit like the earlier one we just did. So not a bad question. So this is your budget, and like I said before, this is what matters. This information here is what matters. Yes, because this helps you find out what the cost is per unit. And that's how, well, again, whatever you're comfortable with, I think as long as you're arriving at those answers. Because you see here, you know that to produce 3,000 kilograms, oh, sorry, 3,000 units, right? It says 3,000 units, you need 6,000 kilograms. So that means that to make each unit, you will need 2 kilograms, right? So you know your standard situation is 2 kilograms. Now you also know that these 6,000 kilograms, you've budgeted to spend 21,000. So the question here is, therefore, what is the cost of 1 kilogram? And the cost of 1 kilogram must be, yes, 21,000 divided by 6,000. Right? And that is 21,000. We'll do them step by step. 21,000 divided by 6,000. That's £3.50. £3.50. So you have your starting point of finding out anything you need. So I'm just going to write £3.50 just because of space and 2 kilograms, and then just clean all this out. I mean, this is recorded, so you can see what I've just done. Just going to do that. Okay, so what was I talking about? I was saying that we need 2 kilograms and that's £3.50 per kilogram. And I'm just going to draw my table here. I know it's £3.50 here, and I'm expected to use 2 kilograms for every unit. Then let's jump in. What actually happens is that you make 3,200 units. So if you're making 3,200 units, I'm expecting you to use 2 times 3,200, which is I'm expecting you to use 6,400 kilograms. That's what I'm expecting you to use. I'm going to change my pen color. So what actually happens here is that you, according to the question, you actually use 6,000 kilograms. Interesting. So you actually use 6,000 kilograms. So what you have here, I mean, I will do all the variances just because, and you actually spend £3.50. So from a materials variance point of view, let's just look at that first. We have here a saving. Sorry, yeah, you use 6,000 kilograms when we were really expecting you to use 6,400 kilograms. So from a material efficiency or usage point of view, or efficiency variance, usage is what they write, but it doesn't really matter. You have a 400 kilogram is favorable, of course, right? And then we are costing that at £3.50, right? So 400 times £3.50, and that's 1,400. So your material variance is 1,000. Your material usage variance, yes, is 1,400 favorable. Now, you actually did use, right? I mean, the question here is that you actually did use £3.50 as well, right? Because that didn't change. That you spent 21,000 on 6,000 kilograms. So there is just no rate variance, because even if there it is not, and because it's the same thing. These two are exactly the same. That's my purple one. Yes, let me go back to my custom here. That's you doing that, the same thing, and that's the red one doing exactly the same thing. So there is no material, sorry, price variance. There's nothing. So the total variance, of course, must be the two together, which is 1,400 and 0, which is why we have here 1,400 400. I mean, I'm just doing this now. I'm just seeing it. So I'm showing you that I think the best thing is to just do it. So I'm just going to write my answers here under materials. Um, Total variance is 1,400, favorable. Um, Material variance here is material um, efficiency or material usage. Let's use U so we don't mix it up with labor. Material usage variance was 1,400 favorable, and material price variance was 0. Right now, I can clean this up because I need the space. Right, so let's just do all of that, and I will come back and use these graphs. But let's just clean that off, and that's the first plan. That's the idea. Okay. Right, let's look at labor and just walk through exactly the same process for labor. It means that we can always go back and put our figures in. So labor, we require, like I said here, you want to make 3,000 units and you need, or the idea is we require you to use 1,500 hours. You can see it there. So therefore, to make 1 unit, we are expecting you to therefore use 1,500 over 3,000, which is 0.5 hours. That's the plan. So I'm expecting you to use 0.5 hours to make each unit of labor. Now you intend on buying these 1,500 labor hours for £15,000, which means that for 1 hour you're intending to spend £10. That's the plan, isn't it? Divide that by 1,500 and you have 10, don't you? So that is £10. So I can now clean that up to give myself space. Yes, clean that out. That's £10. And so, therefore, let's work this. We have a scenario where you are making 3,200 units. If you are making 3,200 units, I expect you to use 0.5 times 3,200, and that comes to 0.5 times 3,200. I expect you to use 1,600 hours. I expect you to use 1,600 hours. And you have used 1,920 hours. That's what you've done. You've done 1,009. So from an efficiency point of view, I can just analyze that first over here. So you have done an extra 320 hours than you should have. 320 hours, right? That's the difference between these two. This is adverse, right? So of course, measuring this is the 320 extra hours that you have done at adverse, of course, at £10, which is 3,200 adverse. So your labor efficiency variance, is 3,200 adverse. That's the first thing. Right. Now let's look at your rate variance. Again, what's interesting here was that you have spent on each of your hours. I mean, this is what you actually did. So you should have spent £10. So 10 times 1. So you should have spent 10 times 1920, which is 19,200. That's what you should have spent. And what you spend? You did spend 19,200. So there is no labor rate. The labor rate variance is equal to 0. That's why you can see this is 0. This is the labor rate variance. So the total variance, of course, must be 3,200 adverse if we were actually working that out. But we're doing it. We're just writing everything out, right? That's important because that's what you should have done, and that's what you did do, right? So that's worked out as it is, right? Okay, great. So we've got those answers there, right? I hope there's nothing confusing there. In fact, the thing about these things is you could have said, oh, Ian, how much did I spend an hour? You could have done that, and you'd have got 10, and you'd have said, well, 10 is 10. It doesn't matter whether you're going forward or backwards or totals, as you wish. Just make sure you're arriving, whatever works for you. Make sure you arrive at those answers. Okay, right. Let's let's just do this. Let's come over here. That's all right. Let's just do the variable overheads. Let's do the variable overheads. 1 second. Let's just do that very quickly. Let's just give ourselves. Let's clean this up a little. Just tidy everything up here. Okay, right. So what's going on here? We're going through exactly the same process. In the previous question, we saw this the point that variable overheads mirror their labor counterpart very closely. And what we see here is that you have variable overheads of 1,500. So the whole idea is that we are expecting to use variable overheads of 1,500 to make 3,000 units. And in very like fashion, therefore, for 1 unit, I'm expecting you to use, divide this by 3,000, of course, 0.5 variable hours in fashion with um, with with labor. But there's the difference, the only difference really is cost. So for these 1,500 hours, I'm expecting you to pay £3,000, if you like, and therefore each of those hours, therefore, really is really costing about 3,000 over 1,500, which is £2, isn't it? So, right, because 1 hour, if 1,500 hours cost 3,000, 1 hour costs £2. And that's that. So let's come over here. Right. So what have I really done here? Where I've said you need 0.5 hours and each should be at £2. So let's just clean that, give ourselves, I can get rid of this just in case I need some space up there. Let's get rid of that. So that's what I need, £2 for every variable overhead. Yes, £2 for every variable overhead hour. And then what am I going with now? So it says that you did 3,200 units. So 3,200 units 3,200 units means that you should be using 1,600 hours. You did 1,920 hours. Again, notice how this is very much closely related to labor, but I'd like to do it separately so that you never get mixed up. There's no problem in that. So in terms of efficiency, labor rate efficiency, what we have is 320 hours excess, 320 hours um, adverse at £2, an hour, and that takes us to 640 adverse, right? And so I'm just going to do this over here for this was for so for variable overheads, the total, I'll come to that in a second. Total, I don't know, but I can tell you at least immediately variable overheads efficiency variance is 640 adverse. I can tell you that. Let's look at the uh, price or the rate variance. So you should have spent £2 on these 19-20 hours that you did. You should have spent £2 on them, and that should take you to 0. 4, 2 times 9 is 18, 1, 2 times 1. That's what you should have spent. The question here is, how much did you spend? You spent 3,000, you spent 3,456, and that gives you a favorable variance of 384. Favorable, and they've calculated that for you, but you couldn't have known that by looking. You couldn't have known that was favorable or adverse, which is why I think this is slightly flawed. When I say flawed, this question is they might have just asked you to calculate everything, but I suppose it does help with confirmation. So your variable overhead price or rate variance, rate price variance or rate variance or whatever you want to call it, rate variance is 384 favorable. Right. So you have two variances. You have 640 that's adverse and a rate variance that's favorable. So the difference, of course, will give you your overall variance. So let's just do that. That's 640 minus 384, and that's 256 adverse. 256 adverse, right? Cool, great stuff. And then, oh, they did give it to us. Oh, there you are. They're both there, right? See that? Okay, so finally, let's finish off with the fixed overhead variance. So you can just go back in and just put all of this in the schedule once you're happy with the important thing is you know how we're arriving at these answers, right? Okay, so right, so with our fixed overheads, what do we have? This is the budget. I mean, this couldn't be more, I've talked about this before. This is the budget. Your budget is £9,000. Your production volume, your budgeted volume is 3,000 units. So you could argue this fixed overhead absorption rate, you should have left things alone, really. Fixed overhead absorption rate is 9,000 divided by 3. So you intend on putting £3 in your accounts for every unit that you produce. That's the plan. That's the plan. So this is the original budget. So what happens is that you end up making 3,200 units. I'm just going to make my line again. So what's ended up happening is you have put into your accounts 3 times 3,200, which is 9,600, isn't it? You've put in £9,600. So this is what actually happened, the 10,000. And again, using my different pen colors, let's just do that. Like I said to you, the first thing you really want to do is that you want to bring this back down to the actual budget. And the actual budget was 9,000. So you've put in 600 too much. So you're bringing this down. So what we have is a favorable fixed overheads. I'm just going to use a different pen color for that. So your volume variance is a £600 favorable journal to bring this down to 9,000. Then what you're going to have is an expenditure variance, which is sort of saying, well, listen, what actually happened? Well, what actually happened was a cost of 10 grand. And so we're taking this back up from here. So you actually have a £1,000 adverse expenditure variance. And so your total variance, which would have been, what would have happened was you'd have put this through as normal because you're journaling it, and you said, oh, there's a difference of 400. We need to increase the actual variance. So your total variance, your total variance is what we call total variance is 400 adverse. I mean, it's 400 adverse because of your journaling. But if you're breaking down this 400, so in effect, what is this 400 made up of is what we're really asking. 400 adverse is made up of an expenditure variance of 1,000 adverse and a volume variance, and a volume variance of 600 favorable. That's the relationship between these three. So you can just take all this and plug it in and plug it into the question below. Let's just go there and see, and that's what they're asking for. And so of course, there's the very first bit here, the standard marginal cost of production. So let's just tackle that. I think we can go to the initial page. We can go back here and tackle that. Now, what is the standard initial cost of production? The total cost of production, guys, is 48,000. Oops, sorry, it's 48,000. So 48,000 is being used to produce 3,000 units. So if 48,000 is being used to produce 3,000 units, the cost of making each unit, if you like, is £16, right? That's 16 pounds. And if that's £16 to make 3,200 units, I'm really flexing my budget here. That's what they're asking for. So 3,200 times 16 is equal to 51,200. So your standard starting point is that you're expecting to spend 51,200 on this. So your answer that you're going to put in here to start off with is always based on it's 51,200 here, and then you just work everything out as we have done going along. Cool, great stuff. I hope that's been helpful.